in this video tutorial segment, we're going to share with you some fundamentals about general terms, tax terms. Just kind of familiarizing you with them. Also remember that everything is in this field or as a tax preparer in training, and also just actually processing the returns. Everything is kind of repetitious. You hear the same thing over and over again till it becomes very familiar to you. So with that being said, we're just going to go through some terms. We're not going to go through all of them. I do recommend that you read pages 35 through 50 just to familiarize you with some of the terms, and then again we'll probably be sharing more with you in later webinars, but here we're just going to go over some terms that you'll be coming in contact with and hearing through us in terms of the training. So how do I file a return? Well, all returns are electronically driven by the IRS e-file system. Instead of using paper returns, we file everything online. Because of it, it just makes everything easier and more efficient, and usually reduces issues of errors on the most part. And that doesn't mean that errors don't occur, but it reduces errors. What is a filing status? Well, a filing status is based on marital status and family situations. A taxpayer will fall into one of 5 possible filing status categories, and they are single individuals, married persons filing jointly or separate, married filing separate, also an individual that is a head of household, and a qualifying widower. And also, I skipped over one, married filing jointly or a surviving spouse. So these are some of the filing status that you want to familiarize yourself with. And they're pretty simple, and they're right here, and they're also in your guide, the filing statuses. And then the terms go into what constitute an unmarried person. And usually any type of legal document, court order document, usually kind of backs up anything that has to do with marriage, and also annulment, and also divorces, and that kind of thing. And also a lot of times that paperwork will share with you who actually has the rights to the children as it relates to filing tax returns. And that's something you want to look at when you file the returns, because a lot of times there's usually issues in those regards as to, what year which parent is going to get the children in order to file them. But whatever that is, the child has to live with that parent over 6 months of any given year. So that's something that you have to look at. So that's what this page is talking about, is what constitutes who, what is an annulment marriage, what is a divorce. And it's basically, it's just you obtaining any type of documentation that shares with that. Head of household or qualifying widowers with dependents. Let's bring this in. If you are considered unmarried, you may be able to file a head of household or as a qualifying widower with a dependent child. And that's it. It's just as simple as that. Okay, so we're going to move on. And again, we want you to read this in its entirety so you know exactly what to look out for. And also the system does a lot of the work for you. In terms of, and also your intake form. Your intake form, when you give it to the client, they have to fill it out. And when they do, it lets you know what their situation is. Okay, so same-sex marriages, this is where we're at right in here. Same-sex marriage, Let's see if we can bring this in closer. For federal tax purposes, individuals of the same sex uh, and are married, if they were lawfully married in a state or foreign country whose laws authorize a marriage of two individuals of the same sex, even if the state or foreign country in which they now live does not recognize same-sex marriages. Okay, let's simplify this. Okay, let's say somebody got married in another state and then they move to a state like Michigan that doesn't allow same-sex marriages. They are considered still married. However, if we go down further, the term spouse includes an individual married to a person of the same sex if the couple is lawfully married under state or foreign law. However, individuals who have entered into a registered domestic partnership or considered a civil union or other similar relationships that is not called a marriage under state or foreign law are not married for federal tax law. So if you get a client and they're with, their significant other is of the same sex, in order for them to file together, in order for somebody to claim another person or use as a stand or used in the way they file as a standard deduction, they would have to be married, okay? And they would have to show proof. Let's move on. Let's say a spouse died during the year, you could actually file that person. So, we've had situations like that before where a person's spouse had passed away within the year that the other spouse had filed and was able to claim them. In a lot of cases, in some cases, usually in a situation like that, the person is disabled and may and they could file them as that too, as a dependent. Are there any questions? Okay, let's move on. Married persons living apart. Okay, if you live apart from your spouse, and we're going to bring this in, let's bring this in a little closer. If you live apart from your spouse and meet certain tests, you may be able to file as head of household, even if you are not divorced or legally separated. If you qualify to file as head of household instead of as married filing separately, your standard deductions will be higher. Also, your tax may be lower, and you may be able to claim the earned income credit. The filing status is single if you are considered unmarried and you do not qualify for another filing status to be determined. So there's a test, and it's real simple. If you're married, person living apart, and a lot of that has a lot to do with individuals who are in combat, they're living overseas, and there's a lot of parameters with that. Well, we're going to talk to you later about that. Widowers, your filing status may be single if you were widowed before January the 1st of that year and did not remarry before the end of that year. You may, however, be able to use another filing status that will give you a lower tax if it's at all possible. Also, married filing jointly. It's something we talked about a few minutes ago, so we're going to move on. And again, you need to read through this carefully so you understand some of the parameters. Spouses who died, again, you can claim those individuals if they died within that year that you're filing. And also filing a joint return, both spouses must include all of their income exemptions and deductions when they're filing. Okay. All right. So at this point, what we're going to do, we're going to take a few minutes out, and then we're going to come back and continue with our general IRS terms. Okay, we are back. In this segment, we're going to share with you a little bit about relief from joint responsibilities. And there are, situations that occur where a taxpayer may need some relief due to circumstances, okay? And so, you know, when we talk about that, relief from joint responsibilities, in some cases, one spouse may be relieved from joint responsibility for tax, interest, and penalties on a joint return for items of the other spouse that were incorrectly reported on the joint return. You can ask for relief no matter how small in the liability. And so there is a form that you can fill out called an 8857 that helps in that area. So you definitely want to do that if it's a situation where you've got a couple that, or a couple that's been married, but the wife had, or husband, in most cases it's the wife where she's gone through domestic violence and she wants to separate herself from the debt or any tax issues that she's liable for that the other person brought into the marriage. So those are things that you have to consider. This is some great information that you want to read, continue reading on so you understand how this works. And also, there is a publication, a 971, that shares more about innocent spousal relief that you may want to take a look at. Spouses in combat, I mentioned that earlier. I just want to point out some things, you know, that I know that's going to possibly pop out at you. Usually in a case like this, you know, it's a simple format of maybe attaching a statement to the return explaining that the spouse is working is actually in combat, and so usually the person that's filing the return can file it and get some relief there. You know, other reasons why spouses cannot sign: if your spouse or if a spouse cannot sign the joint return of any other reasons, you can sign for the spouse only if you are given a valid power of attorney. So, or guardianship or conservatorship, you know, and these are legal venues that you could take to be able to sign for someone else. Married filing separately. You've got cases like that where a person is not married filing separately. You can choose married filing separately as your filing status if you are married. This filing status may benefit you if you want to be responsible only for your own taxes, or if it results in less taxes than if you file together. So that's something that individuals who are filing separately can do if they're married. Okay, so are there any questions? All right, now who must file? U.S. citizens or residents of the United States must file a return based on 3 factors. There are special rules for dependents, surviving spouses, U.S. citizens, and residents living outside of the U.S., residents of Puerto Rico, and individuals with incomes from U.S. possessions. Remember to use the interview technique, you know, and tools when determining who must file. Okay, what do you need to know? First of all, you need to know the gross income, the age, and the filing status. Where do you get information on the taxpayer's age? Basically, it's on the questionnaire. They'll put their age, and also on the driver's license is the best way to get their age, and it's usually current. Now, how do I verify taxpayers' identity? Again, it's the same way. They usually come in with a valid ID, a state or driver's license. And this is a good example of one. And you want to make sure that the driver's license is in good condition, it hasn't been tampered with, and it has a valid identification number, which is, or date of birth, which is right here. Okay. And that the date of birth, and let me get my little marker here so we can kind of show you what we're talking about here. If I can get my cursor in here, we'd be good shape. We're going to come down here and get our little marker here and draw right here on this particular license. Here's the expiration date. Okay, so you want the expiration date to be within that year, within a year. Okay, if it's beyond that, you can't use this you can't use the driver's license. And not only that, the system will definitely kick it out. Okay, and also you have the date of birth here. Excuse my little drawing technique, and you have the current license, address here. Okay, and that address has to actually be connected to the school that your child may be going to if you have dependents that you're claiming. So you have to really look at that, and that's very important. Everything has to match up. Okay. What documents do I use to verify identity? Again, I mentioned the driver's license, or state ID, which is the top two. You have others. You have a passport, you have visa, you have a military ID, a national ID, an employer's ID, and a school ID. All of those are good, okay? But, in the most part, most people have, driver's license and or state ID. When it comes to do married couples pay more than single couples? Well, you've undoubtedly heard about the so-called marriage tax penalty. And let's bring this up so you can see it. The quirk in the tax law that sometimes makes married couples pay more income tax than they would if they had remained single. Here's a little secret. Many married couples actually get a marriage bonus, paying less income tax than if they were single. So, you need to take that into consideration. Here's a question. Can I file head of household if married but not living together? You are considered unmarried on the last day of the tax year if you meet the following tests. File a separate return. A separate return includes a return claiming married, filing separately, single, or head of household status. So yes, you can. So that's something that you may want to consider, share with your clients if you come across a situation like that. All right. Any questions about what we just shared with you? All right. Okay. Now, what does the IRS consider as income? Taxable income, generally speaking, is the gross income of an individual or corporation, less any allowable tax deductions. Okay, let's repeat that one more time. Okay, you make an income, okay, but you use certain deductions, write-offs, or whatever you want to call them, and you deduct that from your income. So whatever's left is what's taxable. Okay. What is the amount of income that is taxable? Money, property, or services that are received are all considered income. Taxable income is income that is taxed, or income in which personal exemptions and deductions are taken out, and includes wages, salaries, tips, bonuses, vacations, pay, severances, commissions, interest, and dividends. So these are the income that can be taxable. How do I calculate my taxable income? To calculate your taxable income, add up all the income earned in the calendar year, including items such as salaries, investment gains, and rental income. Your tax liability is then reduced by adjustments to income, deductions, and exemptions, which I just shared with you a few minutes ago. So we're going to move on. All right. Okay, we got more about taxable income, and is Social Security benefits considered earned income? Earned income is wages, net earnings from self-employment, certain royalties, honorarius, and sheltered workshop payments. Unearned income is all income that is not earned, such as Social Security benefits, pensions, state disability payments, unemployment benefits, interest income, and cash from friends and relatives. So yes, Social Security benefits are considered earned income. No, they're not. Pensions and those likes, unemployment compensation, disability payments, no, they're not earned income. So you want to make sure that a person understands that you're working with. And again, when you actually process a person that has Social Security, there is an area in your return that you have to input their information, and automatically you'll see that they're not taxed. What is considerable taxable income? Non-taxable income won't be taxed, whether or not you enter it on your tax return. The following items are deemed non-taxable by the IRS: inheritance, gifts and bequests, cash rebates on items you purchase from or a retailer, manufacturer, or dealer, child support payments. So these are non-taxable incomes. Where do I get information on the taxpayer's gross income? Usually you'll see it on the W-2. Okay, and as you can look down further here, you see it right here, W-2, box 1, 1099, which you usually get if you're a contractor and such. You get it right off of here, and that's a good example right there where you get those incomes. All right, well, we're moving on. If we don't have any questions, we're going to move on. Okay. I think we moved a little bit too fast there. How royalties are taxed? Royalties from copyrights, patents, and oil, gas, and mineral properties are taxable as ordinary income. Okay. So if you write a book and you're working with a publishing company and they pay you royalties, then that's taxed. Okay. So you have to look at that. Can you collect Social Security and pension at the same time? Yes, you can. Okay, just to answer that without going into reading much. What income will reduce your Social Security? If you make over $15,000 and $100 a month, I'd say round it off of $1,000 a year, not a month, a year. Woo, that would be good. But no, $15,000 a year is usually what the IRS says you can do a year and still be able to get your Social Security benefits at the same time. Okay, so you may want to consider that, and also completely finish reading down further about more about the Social Security benefits. Okay. Also I want to share with you how much can you earn on Social Security at the age of 66 for 2017. That limit is $16,900. Okay, and the year you reach. So that's pretty good. That's pretty good if you're able to make that kind of money and still be able to receive your Social Security. Okay, now we're going to skip down to what are dependents, right up in here. Okay, now a dependent is a person other than the taxpayer or spouse who entitles the taxpayer to claim a dependency exemption. Each dependency exemption decreases income subject to tax by the exemption amount. For 2014, it was $3,950. I think it's up to $150. So it actually, you can claim a dependent and it can reduce your tax amount. Why? Because you're reducing your tax amount by $3,950. And again,